Jeff, I'm so excited to get you back on the show. How's it going?
I'm doing great, Rob. Thanks for having me back. I'm looking forward to this conversation.
So, if you haven't watched our first conversation with myself and Jeff, he is a practicing physician that ended up retiring and started his own hedge fund called Vailshire. And it's a really interesting story because you just don't hear that every day. You don't hear that. I went to college, got my MD, turned into a doctor, and then I decided to turn around and create a hedge fund. How that process start, and like how does it feel now that you've kind of taken that leap and you're finally fully retired and have moved forward with this with the hedge fund?
Yeah, good question. So it's been a long process. It's definitely not an overnight success story. Because I started Vailshire when I finally opened the doors for business in Vailshire. That was back in 2014. So it had been in my mind, and I'd been working on setting up the company since about 2012. In 2014, I started doing that just as a little side gig to my doctoring. And then, so I had been waiting and basically counting down the days till Vailshire would be successful enough that I could actually retire from medicine. So mentally, I was there years ago. And then it's just financially, I finally got to the point in 2021. So yeah, October 2021, I finally hung up the radiology stethoscope per se, and it's just been awesome since then. So I've been mentally here for a while, but it feels really good to be done with medicine, to be down from two careers to one career because it was pretty intense. And for those 8 years, I was stretched pretty thin, which was a little bit hard on my family. I'm just excited to be finally doing what I completely love doing, and I hope to be doing this for basically till I can't do it anymore.
It seems like most if not all the successful people I know, they end up being at the edge of this cliff and they go, you know what, I'm jumping. And then
Yep,
sometimes it doesn't work out and they fall, but they climb back up to the mountain, they jump again and they jump again, and then eventually, boom, it's at some point it works. But you have to take that jump, you have to take the leap, and it's a risk,
exactly.
but it feels good once the wings open and you actually get a little bit of movement going with it. So it's great to hear, and it's great to hear about all the success that's happened with Vailshire. I wanted to throw you a little bit of a curveball. Obviously, I want to talk about the Fed. I want to talk about what's going on in the markets, whether you're short, long, all these different things. A lot to do with Bitcoin and stuff. I want to talk about in the interview. But the first little curveball I want to throw you is, Biden recently did this relieving of student debt. I was curious what you think of like the overall college system now, because you obviously had to go through a lot of college to become a doctor, and then you're
Sure,
doing
sure.
something that didn't necessarily take the degree that you got to turn to create Vailshire. I'm just curious what you think about the overall college space right now.
Yeah, so that's a great question. I have mixed feelings about it. So first of all, I'm old. I have three kids, one of which is already in college. She's a sophomore in college, and then my middle son is graduating from high school this year, and he's already set to go off to college as well. And then my third son, my youngest, is in 10th grade, and he's all set to go. He wants to go to college. So I'm obviously pro college in that way, but I would say that there are many things. First of all, I'll take the overarching thought to say everything the government touches goes to pot, right? So they're involved in education, they're involved in student loans, and since they've become involved, similar to how it has been in healthcare, there's much less price transparency. There's much less um, there's much less value for what you're getting. So what we've seen in the last 20, 30 years is the price of college double, triple, quadruple, even in my time. So since back when I went to college, my kids are going to the same type of college that I went to, and the costs are four times higher than when I was at college. So, and that was, just back in the 90s. That's insane, right? So obviously you're not getting that much more value for the price you're paying. I think college is great for the experience of college and sort of for the maturation process. You can obviously get at least as good of an education, if not better, if you are an ambitious, self motivated person online, right? You can go learn about anything you want, and you can become a literal master at any topic you want if you have the drive to do that. Part of that, though, is, and this is where I sort of disagree with the people who are completely anti-college, is that not many people have that drive, though, and it's hard. And if we're all being honest, it is hard to really learn something deeply if you're not being pushed and prodded along the way. If you're not taking tests along the way to show that you know something, it's easy to read something and think you know something, but until you've been tested on it, and that's how real life works too. It's kind of like we were talking before this interview about having our own businesses, and it's not until you start a business, until you actually live through it, till you see how difficult it is, and you understand the challenges. You can learn all about them in textbooks all you want, but it's not until you're tested in the real world that it pays off. So that's my feeling on college. I think it's wildly overpriced. But my kids are, at least my daughter right now so far, is going to a fantastic college. She's having a great experience, meeting tons of friends, having a great time. I think she's developing lifelong relationships there. I think being in that network that the college she's at, when she goes off into the real world, it will be nice to have the network of alumni around the country that she could go get a job at some certain place. So that's where I am. I'm kind of in the middle of that. It's overvalued, but it still can provide some value to people.
Yeah, I think that's a really grounded way to look at it. I'm very conflicted because I obviously have a very deep chip on my shoulder from not being able to finish college. I was the kid in the class looking outside of the mountains, like, oh wow, look at bet the view would be pretty cool up there.
Sure.
And they're like, hey, we're in trigonometry, Rob. You got to focus on that whiteboard over there. And I
Yep.
couldn't focus, so I have that chip on my shoulder. But it's the thing that I think about the most. I talked about this with Jeff Booth in a space in the past about how the world kind of got flipped upside down in 2007 in a way. Like when these iPhones came out and you had YouTube and all these things, these are all things that didn't exist before. So
Yeah.
it's
Right.
just completely flipped the world upside down. And it's like, well, what happens? Like, how much more intelligent is a human with an iPhone? Like, dramatically more intelligent.
Yep.
It has
Right.
all the answers at its fingertips at any given moment. You could speak to it. I want to know, when was Muhammad Ali born? It's like, oh, there it is. Like, okay, it's like that just changes the whole scope of things in a way, So it's
Right.
so hard for me to wrap my head around. Like, there's some people that go to college and it makes sense because they might be spending $10,000 a year or something. They figure out a way to do it for cheap, and they found a college where they get it done. But for me, it's almost like I don't know if that prestigious degree, like that Yale or the Harvard or something like that, really holds the same kind of merit that it used to.
I certainly don't think so, and I would certainly never push people. When we talk about it, I'm generally skeptical of the benefits of college for the price you pay, but I do think some people, it is beneficial for some people. And like I said, personally, as a dad, I'm glad my kids are going to the college. My daughter is going to the college she's going to, and I'm looking forward to my son going there as well. So we'll see in the long run. Did it pay off financially? Maybe not, but hopefully it'll be at least a great experience for them. But so yeah, we'll see. The world is changing quickly, and all we all grew up too, with doing things like rote memory exercises all the time, and everything, to your point, that you can just Google and find anything you need to know about anything. Like, what's the point of putting that in your brain if you can just Google it? So then we need to get to what is important, like what is wisdom, like how do you learn to learn, those kind of things. How do you adapt and grow and all that kind of stuff. Those are kind of things that you still can't Google that kind of stuff, how to be wise in real life. But so hopefully college is going to at least help my kids out in that area.
Right on. Yeah,
Yeah,
I
we'll
appreciate
see.
your approach on that. The reason I ask is just it's not every day that you talk to somebody that it's a lot of work to become an MD. That's not easy to do. So to go from that to where you are now, it's like, that's why I wanted to kind of get your perspective on it. And I think it's important for somebody that's watching this that might be 18. That's just thinking about, what do I do with my life? And it almost I, there's not enough financial literacy taught in high school, I think, where kids are
For sure.
thinking about, and they don't think about their parents' finances either. Where they're like, well, how much does my parents work to pay for 50,000 a year or something like that?
Hmm.
Is that really a big deal? Because they don't really understand the concept of money yet. It
Yeah.
wasn't until that it was like, oh, I have bills to pay. This rent doesn't pay itself. I got to go little minute things when you're going grocery shopping and stuff. Where you're like, wow, this adds up. And so when you go out on your own, then you realize how much money really, how things work. And I don't think there's enough literacy taught in high school in a way. So it's almost like I hope that people take a gap year to just think about what they want to do with their life or something along those lines. But I wanted to start talking about Bitcoin a little bit. I've noticed you talked about a risk on, risk off, and you see Bitcoin as a risk on. What would it take for Bitcoin to become a risk off? Do you think? Like, how would that market sentiment change?
Yeah, so good question. I think you and I and most of the people we talk to, say on Twitter Spaces, Bitcoin, Twitter, Clubhouse, those kind of places, we all know what Bitcoin is at a deeper level than the general public, right? And so we understand that it actually is better money. It actually is the ultimate safe haven risk off asset. But we're in the minority. We're in the very, very small minority of people who really get that. Anybody who owns Bitcoin, the vast majority of people currently who own Bitcoin, think of it as just a speculation. It's treated as kind of, I think, a small tech stock, and not to mention all of the rest of crypto is like that times 10. So it's just like this casino for a lot of people. Bitcoin, even though I think that it is the place to go and it will be the place to go anytime. Well, first of all, it's just always the place to go for preservation of purchasing power over the long run, for sure. It preserves it over time and space. We're waiting for that moment where the majority of market participants also understand that and also see it as that ultimate risk off safe haven asset, but I think we're still years away from that. So I think the market cap needs to at least be comparable to, say, gold's market cap, about 10 trillion. So that would be what, 14x. I don't know where we are right now market cap, but maybe 14, 15x or something, somewhere around there from where we are today. So we have a ways to go. Bitcoin moves fast. It's been kind of a sort of a sluggish and choppy 2 years, the past 2 years. But at some point, it's going to take off again, and it could easily go up 10x, in a year or two at that point. And so I think that's where the world will really start taking it seriously. Like, wow, this is here to stay. I think the financial institutions and, importantly, things like pension funds, long-term holders of assets in general. So, endowments, pension funds, other kind of long only type organizations and institutions. Once they finally see that it is here to stay and it's a legitimate asset class that you can put billions and billions of dollars in, I think they will, and I think that's when it starts to get stabilized. That's when it starts to be accepted as this safe haven asset. So we're not there yet. I keep getting this moniker of being called Dr. Bear out there because I am bearish with where we are from a macroeconomic standpoint. So I'm bearish on risk on assets, and as long as Bitcoin behaves like a risk on asset, it's going to do poorly in these kind of macroeconomic situations. People are still going to flock to the U.S. dollar and gold and possibly U.S. Treasuries, although that's we can talk about that too. So possibly not that, but they're going to continue to do that in the short term. I can't wait for the day where it becomes that risk off asset in the mind of most people, but we're not there yet.
It's tough because once you understand it, you realize, well, I could take custody of this, and this is a true safe haven. But most people don't understand it in the same way that they understand gold and they understand things like that. But what's scary is it, like, when I see what the Fed's doing right now, and we just had the Fed meeting, what was it, just yesterday, talking about how they're raising it 2.25%. They do it's a 25 basis point hike, and they act like it's some sort of big deal. But when you actually look at the federal funds rate and what it used to be in the past, you realize like you've done nothing here. It's really not doing anything. But what's scary is when I start studying the federal funds rate, it's like it isn't. This doesn't stop recessions. It triggers a recession when they raise the federal funds rate. So when you actually see, like, every single time they have raised the federal funds rate, a recession is to follow. It's not like it's the other way around. So I'm just wondering, it's like they're playing with fire and they're slowly raising and raising it, and they're not raising it enough to stop inflation, but they're still raising it. So it's like a double whammy of, is there any good upside here? Do you see any possible thing the Fed can do to stop a recession?
Well, I think the Fed is totally hosed, right? They're stuck between a rock and a hard place. So they have, on the one hand, they have this very high inflation that's decreasing standard of living. It's making life very hard for Americans because cost of goods are rising so fast and wages aren't rising fast enough to keep up with that. So life is just getting more expensive and more miserable. So on the one hand, they feel the pressure to raise rates because of that. On the other hand, they have the markets that are sensing what's going on. They're sensing that the support has been withdrawn. The Fed is officially no longer accommodative. They're no longer doing any type of quantitative easing. They're not buying assets anymore, and they're starting to raise rates. So they're tightening. They're getting hawkish. the risk on assets especially, but most just markets in general don't like that. And so that's why we've been seeing this descent. We've been seeing a series of lower highs across the stock market, especially tech stocks, especially Bitcoin, but also just the S&P 500. Most equity sectors have been hurting, and they're telling the Fed, we don't like it that you're taking away our happy juice. We don't like it that you're less accommodative now. So that's not good. So I think we're going to see more of that. So to your point, yeah, they raised 25 bips yesterday, 25 basis points. That's really nothing. It's just sort of signifies. I think they sort of threw that out there, and they're going to kind of wait and see what the markets do. They're still pricing in, and the markets are still pricing in, like on the short term side of interest rates. They believe that the Fed is going to try to raise 6 or 7 times, meaning 150 to 175 basis points, 1.75%. We'll see if they get there. I think the markets are going to have a conniption fit basically before that, and it's going to force the Fed's hands, and at some point they're going to turn back to easing. They're going to turn dovish again, probably before this year's over. And I think that's generally laying the foundation that 2022 is going to be kind of a rough year for equities in general and lots of risk on assets.
To simplify that a little bit, it's like this. So if my math is correct, if they want to raise it to 1.9% on the Fed funds rate, but they're saying they're going to do 7 hikes, so they've done 1, so 6 more. I calculate that in my head, 0.25, that means they have to slip in a 0.5 at some point to get to that 1.9 within a year, right?
Yeah, I think they're going to try to do that. I wouldn't be surprised if even in April, because they said all their meetings are live, meaning that they can raise actively at these meetings. So at their next meeting, I actually think they're probably going to shoot for a 50 basis points or a 0.5% raise, possibly even more. Honestly, it depends what inflation does in the meantime. One counterpoint while we're talking about this is I will say, even though inflation is really rough on the citizens, the government, the US government and the Federal Reserve, they like inflation. They want inflation. They want treasury rates to stay low. So those interest rates to stay low, but they want inflation to run hot because the US government has a massive amount of debt that it can never repay in real money. We all know that it can't pay it in sound money at all. It could never be on a gold standard right now and actually pay it back in gold, real money. And so the only way to get around that without an outright default on this debt is to inflate away the value of the money. So they're going to debase the currency. So on the backs of the U.S. citizens, our currency is going to get debased actively, I think, for the next many, many years while inflation runs kind of hot. That's self-preservation on behalf of the U.S. government and the Federal Reserve at the expense of the U.S. citizens. And the last time they did this was actually back post World War II in the 1940s. And if you can know your history enough, and I know you do, Rob, but so going back into history, at that time it was illegal to own gold, and Bitcoin didn't exist. So there was no outcome for the U.S. citizens to do anything other than just go along with what the U.S. government was doing. Not to mention, we were feeling pretty good, I imagine, because we had just we're on the winning side of World War II, right? And suddenly everything just sort of fell in our lap, and life was really good in America for the next several decades. This time around, people can own gold, and Bitcoin exists, so we can own Bitcoin as well. So we have alternatives to just simply holding the U.S. dollar. I think that's going to really throw a massive wrench in the plans of the government and the Federal Reserve. And so this time, what I think is going to happen is people are going to start to lose faith in the US dollar. And I think we're seeing lots of that right now. There are major cracks in the foundation already. And I think that's just going to get uglier and more apparent throughout this decade.
It's a scary thought process, especially when you're seeing this news like the Saudis are going to start accepting yuan and stuff like that. And there's
Mm-hmm.
that stuff that one of the things that I just brought up on Twitter recently with in regards to gold is, and this is actually, Bitcoiners will look at this and go, "Ha, this is why Bitcoin is superior to gold." And then gold bugs will look at this also and go, "Well, actually, that's a very interesting trait of gold is that there is no trail on gold. There is no way to audit gold in real time. There is no way to know exactly who holds gold or where they got their gold from." So when I look online and I go, "How much gold does China own? How much gold does Russia own?" And it actually puts a number out there. It's like, You don't. Nobody knows. Nobody knows
Hmm.
how much. We don't even know. We haven't even audited our own gold holdings since in
Right.
1986. We have not audited what they have at Fort Knox or anything like that in the
Hmm.
states. So it's like to say that we know how much gold the Saudis have, or how much gold the Russians have, or how much gold China has. Nobody has any idea. And I have this weird feeling that the Saudis would accept gold because they actually did this in the 40s, I believe. They forced the U.S. to start paying them in gold for their oil for a short period of time there. What you were just talking about from that time period in a way. So a part of me wonders, it's like maybe they're going to, these trading partners out there are going to start looking at fiat currencies as at a whole and go, we don't want any of the fiat currencies. We'd rather you just pay us in gold or pay us in Bitcoin or something along those lines. People might realize that that no individual country should have this kind of power because it always corrupts.
Yes. So I think to your point too, I believe it was the year 2014 when China and some other nations officially started buying much less US debt, right? And I think they saw the writing on the wall and they said, okay, we can continue to buy US treasuries and fund the United States military around the world and all these things that are kind of, antithetical to what we're doing, speaking from China's perspective. Or we could go around and start using this money and buying hard assets. And so China made that switch all the way back in 2014, and it didn't get a lot of airtime at the time. But I think we're starting to see the significance of that now. All of these other nations aren't buying our debt anymore, at least not nearly to the extent that they used to. It used to be like, this is what you buy, right? This is the risk-free asset. We can earn a nice interest rate. Now people are like, why would I buy this? It's debasing so quickly. Like even if I do get paid back these very low interest rates that long-term treasuries offer, um, it's in debased currency, so I'm actually losing money holding that. And why would I continue to fund the United States, military machine, if we could preserve our own self-interest? So I think that's what those countries are doing. And since then, you'll notice that the Federal Reserve has really ramped up their purchases of treasuries. So basically, we're monetizing our own debt, and you can keep that facade up for a while, but after a while, people start to realize, like, wait a second, can you really do that? Like, you think of it for yourself personally or your family. If I have a credit card, I could keep borrowing and charging things, and then I could just get more credit cards and then take this debt and put it on to this credit card and then get a credit card. And no, at some point, you can't do that anymore. At some point, somebody's going to say, hey, wait a second, like, I don't believe you anymore. Like, you're not legitimate. You don't actually have the money. I'm not giving you any more credit cards. I want my money right now, or you're out. You're going to jail or something like that. That's what would happen if we tried to do that. But now we're seeing it actually happen on a national scale, and with the most powerful nation in the world, the United States. People are starting to not believe that it's worth having our debt because they're actually losing purchasing power over the long run. So it's very interesting, and that's why I'm so thankful for one gold that has been throughout history a great preservation of purchasing power over the long run. And then obviously Bitcoin, I'm even more excited about because it actually appreciates your purchasing power over time instead of just keeping it steady. So those are great tools to use for every person, individuals, all the way up to nation states, for declining purchasing power of government fiat currencies.
I totally agree. To go back to the Fed real quick, it's like, so the overall kind of summary of your thesis in a way is that you think they start doing these things, they tighten, they act like they can do what they're going to do with raising rates and all of that, and then suddenly we see the market start correcting, they get very nervous, and they start running the printing press again and start QE back up. That's kind of the
Mhm.
overall sentiment in a way.
Yes, I think that's inevitable, and I think it's going to continue until the currency dies. Honestly, like I think they're talking about tightening right now because they're trying to tame inflation, but at some point they're going to have to give that up, and they're going to revert back to quantitative easing. And I think in the next time they print money and increase the monetary supply, it's going to be much larger than it was last time. And it's just going to keep stair stepping up higher and higher and higher until basically it drives the value of the dollar down to zero.
It's a scary thought, and what scares me the
Hmm.
most about the rate is the rate of inflation. So I've said in the past that it's like, well, inflation is, if you look at the rate itself, it's up 5x because within a year, because you go from January of 2021, it was at 1.4% was the CPI, and then it jumps from then just a year and a month later, now we're at 7.9%. And if my calculations are correct, that's over 500% growth on the from 1.4. If you just divide 7.9 by 1.4, you realize this is like 560 some odd percent. That it's jumped up, And it's like if that does that one more time, you're talking about a 35% inflation rate. And then if it stays up, if it just stays up at this level, you start about compounding that inflation rate year over year. And you want compounding interest in your favor, not against you. So it's kind of crazy to see what's happening right now, and then to see Powell come out there. The other thing with Powell is that he talked about, oh yeah, there's room for another reserve currency. That went over a lot of people's heads, but I'm like, he never used to talk like that. He used to be very high on the pedestal in his prior talks. He'd be like, oh, we're the reserve currency, and there's never going to be any change about this. We're always going to be the reserve currency around here. And then suddenly now he's like, oh, well, actually, yeah, there's room. It's like, whoa, 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 whoa. Do you understand what that does? If there's room for another reserve currency out there, that completely displaces the dollar and gives somebody another option of where to store their money. So it's like short term, the dollar might look risk off, but eventually it's like a hot potato. I keep saying this on my channel, like a hot potato theory, that it's eventually like people are getting into the dollar as a safe haven, and then inevitably that dollar is going to burn them once they realize how hot inflation is. And if we see another report at 8.5, 9.5 or something like that in the future, they're going to want to throw those dollars at some point. So it's like a short-term strength, and then maybe they throw it. Do you think that kind of plays out in some way? And like what kind of timeline do you think that'll be that people will get kind of nervous to hold dollars? Because right now it seems like when I'm looking at the DXY, right now, let's see, where's the DXY as we're doing this interview. It is currently at 98 right now, which is still relatively strong.
Mm-hmm. Yeah, and I think we're going to see more of that in the coming weeks and months, possibly. And why is that? It's because, again, when people get scared and they panic, they sell their assets. They sell the stocks in their 401k or IRAs or wherever. They sell other assets. And basically, when you're selling that, you're buying the US dollar. And so that's why the dollar goes up. It's going up relative to other fiat currencies. That's what these baskets of currencies show. It's also just a good safe haven in general. When the world is collapsing, the dollar tends to, be this anchor in the storm. But to your point, yes, but it's also inflating away, right? So it's losing its purchasing power. So to the hot potato point, you can only hold this thing so long before you get burned. So at some point, people are going to decide they have to put this somewhere else. I think hard assets, I think commodities are going to be beneficiaries, and they're going to continue to be beneficiaries throughout most of 2022. I think Bitcoin at some point starts to benefit more. And I do think it's going to bottom here probably in the next month or two, I hope. I actually am hoping, as you probably know, for a capitulation event. So I want to see it just dump hard. And then I think that will be the bottom, and that's the time to really go all in. So if you have dollars sitting on the sideline, that's when I would be putting them to work in Bitcoin specifically. I wanted to say one other thing regarding the Fed. The Fed's job even is not what they say it is. They talk about their dual mandate, right? About price stability and kind of and job security, kind of like getting the unemployment rate as low as possible. I think what they're really doing is managing public perception. They want the public to believe that they can control inflation. They want the public to believe that they've got the stock markets under control and that everything's good and that we actually have sound money. They really don't have that control that they say they do, though. And so I think Powell, and listening to him talk yesterday, was almost comical, talking about the strength of the economy, right? And it can handle raising rates because we're in a strong economy right now, and the dollar, and then how he threw out, there's room for another world reserve currency, kind of like, oh yeah, like we knew this was coming, but and never admitting, of course, that their policies are what is causing the demise of the dollar and the demise of it as the world's reserve currency. So we're definitely, from the United States perspective, falling in terms of our strength, from like our political clout to our clout just around the world in general, and our monetary strength. I think we've peaked long ago and we're on the descent. And he sees that coming, but he could never admit that. So he's going to sort of just casually throw out like, oh, it's great if there's a couple of reserve currencies or whatever. Like we were planning on this all the time. But what he's not saying is like, we can't stop it. We've painted ourselves into a corner. Inflation is going to be the name of the game for this decade. People are going to start losing confidence in the U.S. dollar. That has massive repercussions throughout the entire world, especially based on the U.S. kind of the petrodollar system. And so those are the stuff that is always going on behind the scenes, but you'll never see at a press conference.
And that's the thing. It's like everybody in the stock market, they don't look at the unit of measure. They're not looking at what is this denominated in, because I'm always looking at like the gold to silver ratio, or I'm looking at like the gold to silver ratio or the gold to platinum ratio or things like that, and denominating them in different things. But it's like most people are not looking at a Tesla stock, and they see a Tesla stock at $800, $900 a share or something, but they're not seeing that the unit of measure is a dollar. And they don't
Right.
understand that if that dollar loses purchasing power, that stock essentially has gone down but doesn't show it yet. So, like, how do
Yep.
you really steal from somebody? You take out of their pocket and don't know that it's missing yet. You pickpocket them, and they just have
Right.
no idea that their wallet's missing out of their back pocket. And so that's what inflation is really doing right now. And just dollar, I mean, the dollar has lost. I think it was like Charlie Munger that said that it's inevitable that the dollar will go to zero, sort of thing, right? And it's
Hmm.
like, well, it has. If you look at the last 100 years, the dollar lost about 98% of its purchasing power since 100 years
Right.
ago. So it's like, it's just inevitable. Um, how is there any possible scenario to be bullish in the stock market right now? Because I know you're getting a lot of pullback on the Twitter space. Because the thing is that what I like about you, Jeff, is on Twitter, you tell it like it is. You say like, "Hey, I'm short right now. I'm kind of bearish right now. Things don't look too good on my scope." And you've been right a lot of times. And a lot of people, even if you're right, they don't want to give you credit for it in a way. So it's like, what right now, just to be more clear, you're short right now in a way. You're kind of bearish right now, but there's a possibility of, say, QE starting up again or something like that that could make the market run hot again. Like, what's your overall sentiment as of right now, as we're making this interview? Where do you think the market's headed right now?
Yeah, so that's great. So yeah, I'm a big fan of intellectual honesty. I'll always tell you what I think, and I'm not going to blow smoke up your butt, and that's people who are long any asset, whatever asset it is. It can be Bitcoin, it can be stocks, it can be Berkshire Hathaway, it can be Tesla, it can be gold, it can be anything. If they're like a fanatic about that asset and you tell them you think it's going to go down, they'll like resent you for it. Even if you're just being like, well, yeah, it should go down. It's gone up a little too much, blah, blah, blah. I mean, you wouldn't believe the hate mail I get because of this kind of stuff. And I'm like, I'm just
Oh,
telling you
I
what I
could
see,
believe it.
right?
I could believe it.
I know you can. You go toe to toe with people a lot. Um, so yeah, it's March 17th right now. We've had a bit of a rally. I actually just tweeted this out right before we started that I think we're just seeing another set of lower highs across risk on assets. So they're kind of counter trend rallies. So even though my modeling system that I use for throughout Vailshire, the trend is still definitely down, still definitely bearish across these risk on assets. There are things that are doing well, by the way, and we can talk about those, but the things that are doing poorly, which is what most people invest in, right? It's your growth stocks, your tech stocks, the FANGs, um, Bitcoin and crypto kind of things. All of those are just clearly in a downtrend. It's not subjective, it's objective. They're down and they're going up, and when they hit a little peak, it's usually a lower high, and that's usually a sign from a trading perspective. That's a good time to short things. And again, I want to make it very clear, I don't short Bitcoin, but I do short crypto exchanges. I loved when I think Bitcoin is going to go down. I love shorting Ethereum. It's one of my favorite plays because Ethereum tends to do react even more violently or more volatilely. Yeah, more volatile than Bitcoin. So I'm short lots of things like that right now. And in fact, just this morning before we started, I added to a bunch of my shorts and did a bunch of that yesterday afternoon as well. So I'm still bearish.
Yeah, and I think a lot of people, they need to understand that, and that must be a tough dichotomy in a way, if I'm using that word correct, where you want to be hodling, and putting Bitcoin in cold storage and just forgetting it, but at the same time, you're running a hedge fund, and your clients don't want to see this crazy volatility. You have to make sure that it's a steady growth in a way. So you kind
Yep.
of it must be pulling you from both arms, whether you want to be trader or a long term hodler and just adding to the position.
Right. So it is, but it's easy for me for some reason. I can split myself down the middle pretty easily. So I just have, so me individually for my family, I dollar cost average into Bitcoin every week, and I don't ever think about the price, and I don't care. I use Swan, I use some other things, Strike, that I like, and I just buy it. Don't care. It could go down another 90% from here, and I'm just going to keep doing exactly what I'm doing because I believe in where it's going over the long term. And I don't care about the fluctuations in my net worth, my portfolio. At Vailshire, my hat that I wear, my Vailshire hat, I'm managing risk and volatility for people. I have tons and tons of clients who they don't want to see their portfolios drop 30, 40, 50%. So I can't just simply buy and hold assets that go down 60, 70, 80%, as these things do sometimes. So what I do is I hedge against that. That's why I run a hedge fund, is so that when I think that the market is going to go lower, I can actually short things and actually try to profit on the way down, and not just sit there and passively lose money. So that's how I do things. And to me, it's a dichotomy, but it's kind of easy. It's just sort of two separate things that I do. It's, that this is my day job, and then me personally, I have my own way of doing things. So I like to make it clear when I'm talking to people too. You need to know yourself, and if you're not me, and you're not one managing a hedge fund on one hand, and then also an individual doing your own thing, you have to know, are you a trader? Are you a short-term guy that's going to try to trade the ups and downs of the markets, or are you a long-term investor and a saver and a hodler? And I think, as I always say, 99% of people should be long-term investors in the way you think about things, especially Bitcoin. So when you hear a person like me on this podcast saying, I think that the next couple of weeks or months are going to be tough for risk on assets, including Bitcoin, because it's still considered a risk on asset by the majority of market participants. If you hear me say that, that is the time, if you are a long-term hodler, saver, investor, you should be buying. You should actually increase your dollar cost averaging into it, because we're near the lows. We're low, and we might be going lower, and that dip is going to present a generational opportunity of like, you're going to look back 2, 3, 4 years from now and be like, I am so glad I didn't sell when Bitcoin was 40,000, and when I think it dips below 30,000, I'm going to be so glad I backed up the truck and I bought more at that point, because you're going to be really happy when it's up 200, 300, 400% in the coming years. So that's how I look at it. Just know yourself.
Yeah, I love that. It's kind of when it comes to like precious metals and Bitcoin, in a way, it's like it's funny to me, because the way I look at it and with my personal holdings is, I'm trying to have as much purchasing power as possible outside of traditional banking. That's my
Nice.
ultimate goal. So it's like
Hmm.
it might even not even be about number go up, in a way. Once you have a good business running and you're preserving your own capital, it becomes in a way like, well, how much permission do I need to ask to buy something or to get access to my funds? So with Bitcoin, you don't have to ask any permission. With gold, you don't have to ask any permission. You just have it. And so that's how I kind of look at the two spaces right now. And I find it's troubling that there's so much hatred between the two spaces. It's like, why not have both? Like, is that, that's an option, right? Like
Right.
especially in a scenario like this, where Bitcoin's being seen as risk on, and metals are seen as risk off, and always will be seen as risk off. Then it's a perfect scenario to have both, is it not? That's what I'm so lost on, I guess, when it comes to like the Peter Schiff and the Bitcoin audience kind of bashing heads against each other. I just don't get it. But that's
Yeah.
at least the way that I look at it.
Yeah, I'm exactly with you, Rob, and I think we're both a little more pragmatic, possibly, and we see the world in a certain way, and we're both, our goals are to preserve purchasing power. Most people don't think like that. They just want to find the thing that's going to go up and make them super rich. They want their lottery ticket, their speculation, and so that's why people get sucked into the altcoin world as well. It's just this casino where every once in a while you get the Dogecoin or the Shiba Inu that goes up 1,000x, and you hear the stories. So everybody wants to be the next person to do that. But once you are old enough and wise enough, and you realize the importance of cash flows coming in, and then how do I protect that purchasing power over time, you just have a completely different mindset, and you're not thinking like that anymore. And when you see trouble on the horizon for, say, the stock market, for crypto world, you're just like, well, how can I best preserve my purchasing power? And if history serves, well, shucks, gold and precious metals should actually preserve our purchasing power pretty well. So I'm with you. In my Vailshire accounts, we have, gold and gold equities and things in there. We have some platinum. Um, and then,
Oh, platinum,
uh,
huh? See, I'm super
just
bullish palladium right now, but platinum, if palladium continues to skyrocket, then platinum has to start trailing it at some point. But platinum is like, they're giving it away. It broke under 1,000, and I'm like, I backed up the truck a bit just
nice.
yesterday and the day before, and it's like, how are you giving away platinum for under 1,000? Do you know how expensive it is to mine platinum? But anyway, I'm passionate about that specific market.
But to your point, most people, most Bitcoiners, and so I say, bless their hearts for this. They see Bitcoin as this ultimate store of value. And I believe that in my core, that it is in the long run. But in the short term, it's still going to be very volatile and still trade like a risk on asset. And so I think it would behoove a lot of Bitcoiners to take a step back and to be like, well, what does a store of value mean? Are there other store of values? Historically, there have been store of values called precious metals, gold in particular. And so take a little time to study these things and to be like, look, these things have worked really well for millennia, right? And even in recent markets, in decades and centuries, they still work as preservers of purchasing power. So when we're in scary markets, consider putting a little bit of your money in there. If you're a fanatical Bitcoiner, and you're just like cash and Bitcoin, cash to pay the bills, and the rest of your stuff in Bitcoin, take a little bit of your cash, or 1% of it, and just chuck it in some gold, or put it in silver, or platinum, palladium, whatever you want. Just take the time to study, be a little more pragmatic, a little less dogmatic, and think about preserving your and your families and your future generations purchasing power. And I think it would serve you well to do that.
Love it. One thing I wanted to ask you, and like it's hard to put this into like a percentage basis, but if there was a way to do that, like what are the odds in your mind of a recession coming in the next year? Like what are the odds? Because I know that Goldman recently bumped it up to like they went to like 35%. Their odds jumped up to a recession coming imminent, and so I know even Elon Musk said he said no later than 2023 will we see a recession sort of thing. So it's like a lot of people are saying that it's going to be before next year. What's your odds on it? You think it's 50-50? Do you think it's like 30%, 20%, 10%?
I think by I think by the first half of 2023, I would give it about a 75-80% chance of a recession happening. It's not going to happen as soon as, so people don't really understand this very well, because they think when the markets are crashing that's a recession. That's not technically a recession. Recession is negative GDP growth for 2 consecutive quarters. So I don't think we're going to get that, because I think so this quarter is going to be bad. It might be negative, but then I think the next quarter we might actually rebound a little bit. Then I think it's going to get bad again, unfortunately, possibly. So that's why I think, and then so that's one thought to hold in your mind. The second thought is we're watching the 10-2, the yield curve flatten. When that inverts, so the rates on the twos go higher than the longer end of the curve, that has predicted a recession 100% of the time. But the recession doesn't happen right away. It predicts a recession within 6 to 24 months of the inversion. So that's the way, and the average is about 18 months. So going out, so maybe a year and a half from now, but I think a little bit sooner would be a good time to plan on getting a recession. Now, recessions, by the way, they can be they're usually initially very bad for stocks, but even in a recession, stocks can bottom and then recover out of them. So they provide good opportunities for buyers of things, especially risk on assets, that will reset the valuations. These things that are selling at, stocks that are at 20 times sales or 50 times sales. A lot of these software companies were like their software as a service, cloud companies, other things like that. These high flying tech stocks, they get massively reset. Think of the dot-com bubble and burst in 2000. Those kind of things happen, and then those things actually become great values at that point. So things that I wouldn't even touch with a stick right now, I'll be looking at it. If Tesla drops from whatever it's 800-ish right now and it drops to 200, yeah, I'll probably take a stab at it at that point. Or if these other tech stocks, whatever we're talking about, if it drops in value by 70-80%, that's a fantastic time to load up for the long haul on those kind of things.
Yeah, and Tesla specifically is almost in a unique position when I study their balance sheet and stuff. They're sitting on like 17 billion in cash right now. So it's like it's a brilliant move, really. When your stock is lofty levels, people don't see it this way. I kind of see it like scooping up your shareholders' money in a sense. It's like, yeah, let's do some secondaries and steal a little bit of that money for our balance sheet, and then it makes us
Yeah.
stronger in a sense. So I wonder, like, what if you're in Tesla's position right now and you got that 17 billion somewhat on the balance sheet? Wouldn't it make sense to start accumulating things that you need, like rolls of aluminum, things like that for the factory and whatnot, to put yourself strategically ahead of your competition, maybe stockpile a bunch of lithium, something like that. The price of lithium has been going through the roof over the last couple of years. So it's like, wonder what you're doing with a company like that. And that kind of goes to the sentiment of what you're talking about, that there are going to be certain places that make sense in a recession, if to be watching forward to seeing if it bottoms out. The problem is like the timing of it all, is so it's almost impossible to time this type of thing.
Right. Not to mention commodities respond differently than equities too, right? So if we have a decade of stagflation, which I anticipate with the intermittent deflationary bust, which is just going to be an ugly, volatile decade, similar to the '70s for people old enough to at least read in recent history, or for some people who remember that. I was born in the '70s, so I don't remember it, but I've read enough. I think this is definitely the time for individuals, and yeah, if I were the CEO or CFO of a company, I would absolutely be stockpiling commodities, hard assets of things, especially like a Tesla. If I need nickel and I need lithium and I need whatever I need, copper, yeah, my gosh, stockpile it as much as you can. Anytime it dips, I would be buying that stuff hard. Maybe you're a home builder and you need access to wood, buy lumber. Like get into doing that stuff when it dips, because I think we're only going to see these prices increase over time, and it's going to be very choppy and volatile. But that's the thing to remember too, and I know you get this, but like inflation, and most people don't understand this. Once your money has inflated, like we just went 7.9%, so we lost 7.9% purchasing power, you don't get that back. That's not how the dollar works. That's the new level, and we're up here now. And so if we see, like, say next month it goes up to 8 or 9% or something, we lose that again, and that's the new level. And you don't go back down again. It's not like, oh man, stuff's going to be really cheap again in a couple of years. It's not like the stock market. It doesn't work like that. When you lose purchasing power of the dollar, it's gone forever. And so your only goal, if you hold dollars, is you want that loss of purchasing power to slow down and ideally stop, to be as close to 0% inflation as possible. But that's clearly not going to happen, especially with the Fed policies. So people have to think about that. If you can't hold the U.S. dollar, if you're holding this hot potato or this melting ice cube in your hand, what do you do? Like, I would get it into hard assets. Like stocks are okay, but again, they're pretty overvalued. And so, but what other kind of hard assets are there? Right? There are commodities. There's gold and silver is easy, and most people understand that. There's Bitcoin. There are a lot of alternatives, and I think people that do that this decade are going to be very glad they did, and those that don't, they're going to realize, they're going to learn the definition of opportunity cost. They're going to really wish they had held some of these hard assets for the coming years.
That's what I respect about you, Jeff. You tell it like it is, and like how many hedge fund operators are out there talking about exactly just that? Like, hey, stocks might be a little sketchy right now. You got to know what you're doing. Make sure to get some hard assets, things like that. It's like you don't hear that sentiment across the board with hedge funds out there. So you're very honest, and I appreciate that about you, man.
Thanks, man. Yeah, I've always been an outside the box guy, and I'm always questioning why people do things the way they do. Like, why do you have this tradition? Why, every other, not every, most other investment advisors and financial planners, they put their clients in 60/40, Vanguard index funds, 60% stocks, 40% bonds. They are going to get annihilated this decade. And even if they have positive returns at the end of the decade, the inflation is going to eat away most or all of it. So their real returns, their purchasing power at the end, I think are actually going to be negative 10 years from now. And they're going to be confused and angry and wondering why. And that's why I'm telling them, now is the time to take action. Now is the time to think about these other things that will preserve your purchasing power. And that's how I run it in my hedge fund that way. And then I run my client accounts that way too. And that's why I'm just super different. And if people like that, great. And if they don't, then great. I'm not for you. But that's what makes Vailshire different. I'm proud of that. It's a unique company, and I like what I do.
I like your style, man. I
Thanks.
was curious. I wanted to ask you, how long do you see inflation running hot? Like, do you see? Because I see it almost as indefinite at this rate. But and then if they start running QE again, then it's just going to be adding gasoline to the fire. But it's like, at what rate does it slow down, or like what kind of growth do you see here happening with inflation? And do you see it plateauing or going down, or what kind of over the next, say, maybe year or so?
Yeah, great question. So I actually think it's going to decelerate. So I think this year will be disinflationary, not deflationary. So disinflationary means decelerating rates of inflation. So the best way to think about it, I think we're going to peak. Maybe we peaked in February, maybe March, maybe April, somewhere in there, and then it starts to fall. And the best way for people who have a tough time with this concept, imagine you're driving in a car down the highway and you're going 70 miles an hour, you're pushing on the gas going 70. I think that the gas is going to get let up to about 60 miles an hour. So we're still accelerating. I mean, we're still moving fast, but we're decelerating. That's what I think inflation does. So I think it goes from about a high of maybe 8% ish for a quarterly number. And then it gets down to maybe by the end of the year, 5 or 6%. So that's still very high. It still is losing our purchasing power at an unfortunate rate and making life more expensive. I think it will be lower at the end of this year, a year from now, than it will be at the beginning of the year.
It's interesting. Yeah, that's a concept that I haven't heard too much. For me, it's hard to ration like I can see that happening, but it's hard for me to think that there's any way to stop it. I don't like it's almost as if like when I look at what Paul Volcker did to stop inflation, and it's like when we look at that website, somebody recently turned me on to the Shadow Stats, I believe it's called Shadow
Hmm.
something website, and
Yeah.
it shows you what the inflation rate was back in the 70s, and if you use that same CPI from the 80s and the 70s and 80s to what it is today, it would show that inflation is around 16%. So at that figure, it's like it's extremely high and it's taking away your purchasing power extremely fast. It's not like it's at
Hmm.
5%. If it's nearing 20% on inflation here, I mean, not even equating for compounding, but if you just say 20% a year, I mean, in 5 years you've lost your purchasing power.
Hmm.
So it's like that timeline is fast. So when you're talking about like the time is now, the time really is now. But it, Paul Volcker had this tool in his tool chest where he's like, all right, well, we drop the federal funds rate down, and we can raise rates up to, or we can raise rates up to 20%, and then that'll stop inflation. And then we can also start. I don't think they bought as much, nothing like the amount of assets they bought now, but that tool that Paul Volcker used to drop inflation from 20% down to 3%, or 15% something down to 3%, we don't have that anymore. Like they can't just overnight turn that switch and jump it up to 10%, or else, I mean, they literally would default. It's like they
Right.
can't do that. So that's what makes me wonder. It's like, how do you stop it if you've used all the tools in the tool chest? Do you see any possible tool that they have that could actually stop it, or is it just the natural flow of the economy that's going to stop it, sort of thing?
So you're talking inflation in general.
Yeah.
I think so. So while I think it's very high, and it's possible that it could go a little higher, everything still kind of moves in cycles or like in pendulums. And so we're just so far to this side right now where inflation has been rising so far, so fast that it's just, to me, it's just going to take a breather. That's where I'm saying we're still moving fast, we're still inflating, but it's at a decelerating rate. So the rate of change is going negative. Um, that's what I think we're doing. So it's and mainly because here's what happens. So oil, right? It's been spiking. That's been the story of the last year. Oil went up. It hit like what, $120 a barrel or
It's
something
back
like that.
down to 103. I when I got on TradingView right now.
Yep. So
When
I
I'm
think
looking
what's
over
get
here, I got the TradingView thing pulled up on
Oh,
the
good,
left.
good. Yeah, yeah. Okay, yeah, I see. Yeah, 103. I got crude oil up as well. So 103 right now. So it had spiked. It's come back down. I think we spike higher again. I think, whatever it is, it's going to be some new. Maybe Russia, the peace treaty isn't going as well as they say it's going to go, and then they attack somebody. Blah blah blah. Oil spikes again. I think we're due for an almost parabolic rise, like what we already saw in part. And it does one more big thing like that. But then what happens is it gets so expensive that the demand for it shuts off, right? Like if you're a trucker or whatever you are, you're FedEx and you have a million trucks that run on the prices of gasoline and oil and all this stuff, you just can't do business profitably anymore, so you shut down. So then suddenly demand, almost just as quickly as the price of oil has gone up, demand suddenly shuts off. And then suddenly the price that just went parabolic tanks. And that's what happens. And that's what's happened with oil. I think since 1970, every time it has risen quickly by 50%, we immediately have a recession somewhere with it. Again, kind of talking about our recession indicators and the yield curves and things. It precedes a recession every single time. I think it's 6 for 6 in doing that since 1970, and we've already done that. It's already gone up 50%. And so, but then what happens? It spikes and then it precipitously drops. And so that's what I've been telling people is I'm watching the price of oil and energy stocks very closely, because when they peak and then start their descent, it's going to be literally like a drop. And that's when the recession, a recession kind of starts in earnest, because the economy has been driven to a halt because of these super high oil prices. Um, Actually lost the, or I can't remember where we started with this, but that's what I think
No,
is going to happen from an oil perspective.
that's a great point. What we were talking about is
Oh,
inflation in a
inflation.
way, and I think what you brought, that's actually a perspective that I wasn't thinking about. So I really respect that you bring that up, because it's like you don't think about what the overall market is going to do, because say the price of steaks go up, the price of any type of specific thing goes up, meats go up, or oil goes up, then maybe people don't eat steak very often as much as
Exactly.
maybe people don't go and travel as much as they used to, sort of thing.
Because that's the rule of commodities, right? The solution for higher prices is higher prices. So at some point, people are just like, look, I can't afford this anymore. Like, I'm going to quit driving my car. I guess I'll walk, or I'm going to your point, I'm going to quit eating steak. I guess I'll just have burgers or go to McDonald's or whatever. That's just how this works. And so that's the cure for high prices is demand just drops off a ledge. And especially when you see a parabolic rise in prices like we have across lots of commodities, people are just like, okay, I guess I'll just kind of shut my business down for a while, or I'll, not consume as much as I had. And then suddenly demand drops, then that causes the price to drop. And then that's why I see inflation peaking, but then starting to decline. And it's a lot of that is driven by my thesis on oil and other commodities. They've helped ramp up inflation really high because they've spiked so far so fast. But then I think they fall far and fast as well, and that's what's going to help drive down the inflation.
Yeah. What also I'm curious about is because so the last CPI report was 7.9%, and so now, but the thing is that didn't really account for the invasion on it yet. I believe the invasion was at the end of February, so we got February in March, but it's really the effects of that I think will be felt in this next CPI in a way. What do you see that next one being? You see it being like 8.2, 8.5, or do you see it being got down to 7.5, 7.9?
Yeah, somewhere in there. So I just basically have, I would say basically where we've been, 7.9, and then with a range like plus or minus 20%. So I don't have a real conviction on that. So probably 7 to 9%. It might come in a little lower, might come in hotter. I don't really know. And I don't really care. I just know it's going to be high and it's going to be similar to what it was. If it's lower, though, I would pay attention to that because that might be the start of disinflation. And when you get, and then going all the way back to the way I think about how my models work from a macro standpoint, if you have disinflation and then you combine that with decelerating economic indicators, decelerating GDP like we've had since Q4 of 2021, risk on assets for whatever reason they hate that scenario and they tank, and so they've been grinding lower and it's been painful. I think they could the floor could drop out at that point. So if you see that stuff start to happen and you see oil hit some peak, maybe it gets up to 200 a barrel, I don't know what it will do, but then it drops. That's when the floor usually drops out of the markets, and that's where I think we could see a big capitulation event, and that would be the time to back up the truck and really be buying, especially Bitcoin at that point.
It's crazy. Seeing this volatility in oil is pretty wild. I haven't seen it in a while. Just seeing it jumping. I mean, I think it pinked up to well over like 120 a barrel, back down to 100 a barrel. Now about 103 a barrel. And so right now its daily change is 8%. It's like this
Yeah.
is crazy volatility for oil. I
Right.
mean, but when you're talking about risk on, and when I pull up the Nasdaq and you pull it back to March of 2020, it makes you realize like just how much it's been inflated in a sense, and how much room it does
hmm
have to fall, because people go like, "Oh, the correction's already happened." It's like, pull that chart back a little bit further. It's sitting pretty high up there still, you know.
Right.
Like
Yep.
how much room do you think then like something like the Nasdaq has to correct?
I mean, I think it could dump. It's what is it down to date right now? Like 15% or somewhere around there. Sorry, I don't have these numbers off the top of my head. Somewhere around 15%. I mean, I think it could go down 25, 30% or so before the Fed is forced to pivot. That would pull the S&P down probably over 20% and into bear territory. Um, yeah, and then at some point, we're going to bottom there at somewhere around there. That's when I would be very interested in starting to make some long-term purchases at that point, but
What kind of
not there
longs
yet.
would you be looking at? I know we brought up in there earlier in the interview that we would talk about some things that you might be interested in, sort of thing. Like what sectors kind of are on your radar right now, and what sectors are on like in a negative way and in a positive way. What are you buying? What would you be on calls, and what would you be on puts, so to speak?
Yeah, yeah. So I would flip almost exactly what I'm doing right now. So in my accounts and in my fund, I'm long gold and gold equities. Some royalty companies, things like that. I'm long energy. So even like some big, so the XLE, the ETF, the energy ETF, and then like ExxonMobil, Chevron, another little company called Texas Pacific Land Trust. TPL is the ticker for that. Long. Like defense stocks, so Northrop Grumman, Lockheed Martin, those kind of companies right now. And then right now I'm very short tech. I'm very short consumer discretionary kind of things, short crypto exchanges, and some Bitcoin miners as well. So what I would do if I think we're at the bottom, I honestly would just flip those. So I know all these companies. Like I love Bitcoin miners. I like private miners the best, but I'm still a fan of public miners. I'm short them right now. What I would do is I think we're going to get to a bottom where they're just like such a great value at that point that I would just turn them right around. I'd close my short. I'd probably wait a day or two. That's kind of how I work because on my models it goes from like right now the trend is very bearish. At some point it'll break that bearish trend line and it goes into in my head on my system. It goes into the gray zone. Then I just sit in cash and I watch it. If it confirms that it's out of the bear trend, that's usually the beginning of a new bull trend. So then I just turn it right back on. The things that I was short a week ago, I would be long at that point. And Bitcoin, obviously. So Bitcoin, I look forward to loading up heavily into Bitcoin at that point, whatever price that is.
Yeah, it's something on my mind is like I just am wondering like say the like I guess first thing I should ask is what other reserve currency do you think Powell could be talking about? Like who would that be? I mean, the obvious answer might be the yuan, but is there possibilities of something else? Maybe somebody tries the Saudis make a gold back something, or somebody tries to do some sort of different thing, or maybe even our own government is trying to do something different. Who knows what kind of reserve currency you think he's speaking towards?
I actually think I obviously don't know, but I think he was just talking about the Chinese yuan. I think he sees their CBDC coming. He knows that they've been kind of hoarding gold and commodities, and they're going to back their currency. And he wants, and they have basically an alternate system that doesn't play nicely with the U.S. dollar system, and they're creating their own network and system. Throughout Asia and Africa and even South America, lots of countries. So he realizes that they are a powerful and rising nation, and their currency is kind of destined to become the reserve currency. Now, coming out of left field is Bitcoin, right? So I think that has the potential to basically totally reorganize the world order from an economic standpoint. I think. Have you seen Ray Dalio's stuff? I really like his work on this, where he talks about the rise and fall of empires.
Mm-hmm.
And in his models, and I actually agree with this, the US, I think, is on the decline. I think we peaked somewhere in the 1980s and 1990s. We're clearly declining right now. We're still very strong, but we're fading. China is high and rising, but then they made, I think, a absolutely critical error by banning Bitcoin and by forcing miners out of their country, because they realize it's antithetical to their central control, right? You can't control Bitcoin, so they want their centrally controlled CBDC that they think is going to become the new world's reserve currency. I think that's, if Bitcoin didn't exist, it would be inevitable that China was going to rise and the yuan would be the new world's reserve currency. But out of left field comes Bitcoin, and it changes everything. And so now I think what's going to happen is within 5 to 10 years, I think we're going to basically see 3 reserve currencies, and it's going to be Bitcoin, the US dollar, and the Chinese yuan. And I think all of the other smaller currencies, weaker currencies, they're going to fall one by one. I think they're going to hyperinflate, and then the people are going to transfer their value into one of those 3. So if you're a US friendly country, you're going to go mostly into the US dollar. If you're a Chinese friendly country, you're going to go mostly into the yuan. And then there's the Bitcoiners that anyone anywhere can go into. So those 3 will benefit. 10 years from now, those might be the only 3 significant currencies. That's how I'm looking at it, and everything else will have gone away.
It's a great take. It's such a crazy macro environment right now. When you look at it, you just go like, what are people going to accept for their payment? It's like we're seeing countries literally bartering. Like it's like it's wild. You know,
Yeah.
are the Saudis
Yeah.
going to accept? And like recently on my Twitter, I posted a screenshot of what a pallet of gold that's like 650 million worth of gold looks like, and it's about the size of a couch. You know, people don't realize like
Mhm.
you could send $1 billion in gold relatively easy.
Right.
People tend to think like you're moving a whole mountain to move $1 billion in gold. It's like, nah, it's about the size of a couch, like about
Yeah.
half of a couch, you know, sort of thing. It's 10 tons is not that much. Surprisingly enough, you could lift it up with a little jack and put it on a plane and boom, off it goes, you know, sort of thing. So maybe the Saudis want to start. Maybe that's part of what they did with the yuan. Maybe they didn't want the yuan. They're like, yeah, we'll publicly say we're accepting yuan, but we want a pallet of gold. You know,
Hmm.
so ship us
Yeah.
a pallet of gold, and then and Saudis are there's these old we call them the poker chips, but they're from the 40s. These old if you look up the Philadelphia Mint poker chips that we paid the Saudis for their gold in back, I think it was Aramco or something like that, made us pay them in these little gold poker chips. And so in the actual U.S. code, it says anything that has U.S. Assay Office on it, if someone forges a coin that says U.S. Assay Office, it's actually a federal crime to do so for each time that you mark that. So like anything that has, like I have an old gold bar I posted on my Twitter as well at the top of my profile. I was going back and forth with Peter Schiff because he can't handle the custody argument. But I mean, that's the one. I don't want to get off on a different tangent, but it's like the custody argument. He can't hide from that as much as he wants to. He can't hide from it, you know. But we have done this in the past. We have marked our gold from an actual U.S. assay office to pay for goods overseas
Hmm.
in gold that they didn't trust our currency in the past. So this is
Hmm.
like a history. And sometimes it doesn't repeat itself, but it often rhymes as a saying. And so it's like there's what is the barter going to be? And a lot of people like they're thinking Russia might adopt Bitcoin or China might adopt, or China never will, but maybe Russia will. But when you bring up the 2014, there was this really interesting report. I forget it was like a little 2-pager. I'll send you it after this interview, I guess. But it's exactly what you're talking about from 2014, that the Russians and China and Russia was preparing for this for a long time. And so that's what
Hmm.
makes me wonder. It's like what's going on over there is this is a game of diabolical chess. I don't think this was an impulsive move here. Which is it's a lot of people. It's hard for them to rationalize that. It's like, oh no, just crazy evil guy. He doesn't have any. He just no
Right.
compass at all. It's like I think there's a methodical thing happening here. And when you look back to 2014 and you study the holdings of Russia, just like you were talking about, they have accumulated a ton of gold since 2014. China has accumulated a ton of gold. And what do they? People just think they're going to want it to go to zero and just for no reason they accumulated all this gold. But then also recently with Russia, they eliminated the VAT tax so people can pay for things in gold and there's no taxes on it over there in
Hmm.
Russia, which is within the last week. Which
Hmm.
is crazy that they did that
I
in the
hadn't
last
heard that.
couple. Yeah, that's a wild thing for them to eliminate the VAT tax on gold. So it's like they're preparing their citizens to barter, and then on top of it, they bought gold like crazy from 2014 to 2020, stopped buying gold for 2 years, and then over the last like I think right after they invaded, they started buying gold again.
Hmm.
So it was a 2 year halt and then a recent starting to buy gold again. And then with China, nobody knows how much gold they have. You know, people try to
Hmm.
pretend like we talked about it earlier, but nobody knows how much gold. Russia, they are I think like 10% of the global supply is mined in Russia. So we don't know how much they're exporting, how much they're keeping, how much they found. We don't know how much they hold. And meanwhile, they're starting to buy gold again and they're allowing their citizens to barter in gold. So it's like makes me wonder, does Bitcoin have to like strangle the environment to be adopted, or like what's because it's hard to imagine a world where they go to Bitcoin instead of gold if they've accumulated so much gold and not that much Bitcoin.
Hmm.
You know what I mean?
That's what, yeah. And this is just why I think we're going to see first of all, we're going to see a consolidation of all of the government fiat currencies. That's why I think they're going to basically go into the US dollar, Chinese yuan, and then Bitcoin. And then those three are going to kind of duke it out. I think the the US is the strongest right now. We've had the lead for a very, very long time. We're clearly fading down the stretch now. So I think from a looking out from a future standpoint, the U.S. dollar is looking the weakest based on its policies right now. And I think, again, to your point, like China and Russia, I think none of this, and I don't even think this is conspiracy theory. I think you can just go back and look at their moves, and especially since 2014, and seen the actions that they've taken. I also don't think this is just some fluke that Putin. I don't think he's some just crazy dictator guy that just wanted to take over Ukraine. All of this has they've it's very well thought out. I think they have their reasons for doing what they're doing. I'm not saying I agree with them, but they can look at this and be like, hey, look, the U.S. Government kicked us off of the SWIFT system. It took our FX reserves. We had to do something else, and you can't blame us, us, because you're the ones who kicked us off. And now this is going to kind of jumpstart this alternative currency that I think they're going to be partnered very closely with China, and the yuan and the CBDC and all that kind of stuff. And I think it's going to be very gold backed by hard assets. And it makes the US dollar look actually kind of relatively weak, and it looks like our move might have been kind of stupid and premature. And I think it's sort of accelerating the demise of our strength and our leadership role as the world's reserve currency. So, man, I don't know. So yeah, the more I just even think about that, the more I think that these nation states, this is the game that they're playing. It's a game of chess. It's game theory. I think they would be much smarter to get into Bitcoin in size, but obviously they're still not doing that. At least China apparently is not yet doing that. But they're backing with gold, and I think the game theory suggests that you got to be either in gold or I think the better asset, Bitcoin, for the coming decades, or you're going to fall far behind the rest of the world.
Yeah, and I think you nailed it in a sense, because in 2014 we were threatening to weaponize Swift, right? It was a threat and we
Hmm.
didn't actually do it. And
Hmm.
now we actually did it. So
Hmm.
that is essentially I don't want to use the wrong words, but it is essentially a reaction, an overreaction in a way, and you are damaging their economy. You are legitimately hurting back. Not that it's undeserved, deserved, whatever it can be taken as, but it is a somewhat of an attack. And maybe that's one where it's like in chess, sometimes you put a piece out there to get taken on purpose in order to take the queen or something like that, you
Right.
know? So it's like, here's
Yeah.
my rook, take it, I'm really after your queen, but go ahead. You don't see my knight there. That's about to take yours for taking that sort of thing. And so it's falling into their playbook, so to speak. And I think you nailed it with that.
Yeah. I was, as you were saying that, I was thinking the same thing. I think they're losing the battle to win the war. And I think the U.S. is winning this little short-term battle, but we're going to lose the war in the long run by doing things like this. It's undermining us to do this kind of thing.
And say we get the news, because we've already gotten the news that Saudis are going to start accepting yuan for oil. Well, that's already dropped. And so if more of this continues to be widespread and we do see another reserve currency pop up in the yuan, is that what kind of effect does that put on the market, on our U.S. market here? Like, what would that do in a sense?
Like the
Do you see the
which market?
dollar
The stock
index? Like,
market?
do you think the dollar index holds its levels? Do you think that basket starts changing quite a bit because of that, or like what could be the effect of that happening?
I think basket of government fiat currencies is such a funny way to look at it. It's actually a perfect disguise to disguise the weakness of all government fiat currencies. I wouldn't be surprised if at some point when we started weakening significantly. So say it all comes to happen. What we're talking about. Say the world realizes that the Chinese yuan is sort of rising as a world reserve currency. We realize, dang, look at all the gold reserves they have. Look at all of the hard assets they own. That will act to strengthen their currency, right? And so I think then what would happen is if they're in this basket of currencies, they're going to rise as everything else falls. I could see the U.S. then, making a decision with the other kind of G7 nations to say, like, look, we need to kick China out because they're not playing by our rules. They're out of the basket, and we're going to stay in our little basket of just dumb, non-backed by anything government fiat currencies, and they'll all continue to fluctuate against each other. So they'll have the appearance of strength, but they're actually just getting drastically weaker and weaker, especially if you compare them to gold or Bitcoin.
Yeah, that's a great way to look at it, because I said on the channel in the past that it's like, who's to say that this basket is the defined parameter of what currencies could be, and that there couldn't be something else looking out? Like, I don't even want to be in your basket. Actually, your whole basket is worthless, all of you. Your whole basket of fiat currency, and the
Yeah,
dollar could be the strongest of that, and they all fall in unison, so to speak,
exactly.
to this other thing. So a lot of people, they think like, oh, if this one goes down, the dollar has to go up hypothetically because that one's going down, and that's what's going on. But it's like, what if they're just all going to drop? What if
Yeah,
they'll? Is that a
they're all
possible
dropping.
scenario? Yeah.
Yeah, they're like 10 skydivers that all jumped out of a plane and they're all sort of doing this with each other, but they're all falling, right? But sometimes one is a little higher than the other one and then the other one rises, but they're all going to zero. They're all going to crash at some point. And so I think the only way to really look at the value of currency is to compare it to gold as a denominator. I think that's actually the best because I think it's again a stable store of value. Actually, I think it's not as good to do it to Bitcoin at right now because it appreciates so fast in the short term, and I think it's going to continue appreciating so fast until it reaches some level. I don't know what that is, 100 trillion, 500 trillion. I don't know what the value of Bitcoin is, where it kind of levels off finally. But until then, I think gold is a great barometer to see what your currency is doing. And if you look over any long term perspective, 10, 20, 30, 40 years, clearly all fiat currencies are just like plummeting in value over time. And that's just going to continue.
I wanted to ask you about, because you're actually bullish on gold here and not as bullish on Bitcoin in this current market, right? Not to put words in your
Hmm.
mouth, but from what
Yep.
I get from you, it's like right now it's a bullish commodities. Bitcoin will be extremely bullish, but it's seen as risk on in a sense, and you're kind of bearish on risk on right now.
Hmm.
Um, what do you feel? What's your kind of overall reaction to this? I know that the term detachment is thrown out left and right with gold. Like, it's always detaching, but it really, if you study the markets here in 2008 and stuff, when we were going to go to a recession, when you see that type of situation, when the market's correcting, we haven't seen gold go up in that type of environment. And just recently it did. So that
Mm-hmm.
was a very different type of reaction. A lot of metals, silver, gold went up while the Nasdaq and the risk on corrected, so it went into the risk off. But it was actually running parallel. It was actually all seen as risk on in the past. So
Mm-hmm.
gold was even seen as a risk in a way, and people just flood into the dollar. But I think inflation this time around might be the wild card that people are worried about. And as that inflation stays so red hot, they're going into commodities, and that's allowing it to detach. I was just kind of curious what your sentiment on that is and why we're seeing that kind of detachment. Do you see that trend continuing? If the, say the market corrected 20% or something like that and had a gnarly pull down, would you see gold go down with that, or would you see gold continue to detach?
Sure. So yeah. So I think it is different, and I think again we'll go back to energy, and we were talking about oil before because I think this is all interrelated. So because of inflation, gold has been performing well and has been a fantastic safe haven asset this time around. I do think that oil is the thing to watch at the moment. So when it peaks and then plummets, which I do fully expect to happen, that's when I think the floor drops out for all risk on assets. And then similar to March 2020, I think everything gets sucked down with it except the US dollar. So all of these gains we're seeing in gold right now, I think they could quickly disappear in a March 2020 type capitulation event. And I actually think that's pretty likely to happen because everyone's just going to panic and sell at that point. So even things that were supposed to be safe haven assets like gold, like U.S. Treasuries, they got hammered in March of 2020, if you remember that. And of course, Bitcoin went down 50%, so it got just destroyed. But
What a great
that ended
time
up
that was. That was such a
right.
great time to back up the truck. Oh my God, looking
Yes,
back. That was
yes,
when I got my first big Bitcoin position was then. And it's like looking back, it's like, oh man. But in equities too, the stock market, I
yes.
wish I never saw them printing that kind of money. To
Hmm.
pump up them. I wish I had if I could just go back in time with what I know
I know,
now
right?
back then, it's like, oh my God, the amount of money that would have been made on Tesla and these risk on assets from all the money printed. It's so hard to, it makes
Right,
me want to pull my hair out sometimes looking back at that
right.
March 2020 chart. Sorry to cut you off. It's just like I
No,
feel
but
that that time period was wild. I mean, Bitcoin, it was what, 4,000,
yeah,
4,500,
yeah,
something like that.
yeah. It was crazy. The deals you get when everybody is capitulating because they're literally selling at any price. They're hitting market order sell. They're panicked. They're freaking out. They're just like, I just don't want to watch this thing plummet anymore. Please, please, please make it stop. And so they hit sell, 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 sell. And so the dollar jacks up because there's suddenly a shortage of the US dollar because everybody's buying the dollar because they're selling all their other stuff. And then yeah, that those present the kind of buying opportunities of a lifetime. And I think that hopefully we're up to that point again. So going all the way back to your question about gold, I think gold is going to continue to do very well in this environment until we have, if we do, and I think we probably will, a capitulation event. So watch oil. If oil plummets, I think it sucks down everything else. I think that's when the floor drops out for risk on assets and basically all assets. So like right now, value stocks have also been doing well. Berkshire Hathaway, energy stocks that we talked about, but other like safe haven grocery stores have been doing well. Defense stocks have been doing well. Even those will get sucked down. I think consumer staples, they'll all get sucked down and then that's the time to be buying right then. So when everybody's panicking and the headlines are all red and there's blood on the streets, that kind of thing, that's when you want to start backing up the truck and buying. And I would start with Bitcoin for sure, and then whatever. If you're an equities guy, like start thinking about those tech stocks, the growth stocks that have just gotten destroyed. That would be the time to buy those.
It's such a rational argument, and it's so tough because, like, even like people that are the sentiment about a year and a half ago in Bitcoin, because I remember I was in Bitcoin. I think my first coin I bought was it was an impulse buy. I had an extra $5,000 in my Cash App, and I was like, oh, I'll buy a Bitcoin. And I was back in that March of 2020 time period, and so that was like my
Hmm.
first time. And then I had something to protect, so I'm like, oh my God, now it's worth 60 grand. Oh crap! All right, let me start this position I've got. It's worth kind of a lot of money now. Let me figure out how to protect this thing here. And
Hmm.
so that's what made me learn so much more about it, because I was off. When you get off zero, then you have something you need to protect. That's why I try to teach people to at least get a little bit of it, because then you have that incentive to learn. If you don't have the
Right.
incentive, you don't really want to learn. But the reason I bring that up is because in that time period, it was it makes you want to go all in on what you believe in. Like, now that I've learned so much about Bitcoin, I've learned so much about precious metals, I want to go all in, and I do pretty much go all in when it comes to metals. Like my palladium position, when palladium had dropped, I went through the roof, and still, as I'm looking at the palladium price right now, what I know about palladium and the market on palladium, it's a joke how cheap it is right now. And some people will think it's overpriced, but I'm like, well, you think Russia owns the nickel market? Because they don't. They only own 10% of the nickel market. They own the palladium market, though. Ironically enough, palladium is the byproduct of nickel. So you have to mine nickel to get palladium. You can't just find a palladium nugget in the wild. You can find a gold nugget in the wild. You can find nickel in the wild, but you're not going to find palladium in the wild. You have to get it as a byproduct of nickel mining.
Huh.
So if
I
nickel
didn't know that.
skyrocketed and at a short squeeze, and ironically enough, the LME is owned by China, so that's pretty wild that they keep the name London Metal Exchange. They stopped the position on nickel and let it and literally halted it, and then now we're seeing what's the funny thing is nobody's looking at palladium, which has been like a 10-year deficit. There hasn't been enough palladium to meet the demand for 10 years already without this going on in Russia. But Russia controls 50% of the global palladium supply. And nobody's talking about that. I'm like, oh my God, I'm gonna buy a ton of palladium because platinum. They have about, I think 15% of platinum comes from Russia, and then another 20% comes from South Africa. So basically, South Africa and Russia control 50% somewhat of the platinum supply, but they own like 90% of the palladium supply. So if those two places are not pumping out palladium, but ironically enough, all the gas cars are using palladium, and then the diesel are using platinum. So if these cars want to lower their emissions, they need palladium, and that's why there's been this deficit. So I try to look into the details of these industrial metals. I mean, look at nickel, for example. Who would have thought that would have 4x'd? You know, that was a crazy trade. But the reason I bring all that up is it's such a hard thing when you have conviction on something. It's so hard to realize I should have a huge cash position. I should have a huge dollar cash position, and it goes against everything we believe in. I think of this pile of money burning in front of me. And I'm going, I need to own that? I want to hold that in my account? Like, oh my God, and not even have custody of it? I got to let this bank hold that much of my capital? I want to put 20% or put hundreds of thousands of dollars and let them just sit on this? Oh my, I don't want to do that. I don't want to trust these people. Buy me more palladium. Go all in on Bitcoin or something. Like, do something with this money here. I don't want to hold it. Go buy a house or something. I don't know. But the truth is, if you were that smart person back in March of 2020 and you held all that cash, and you had that powder dry and you knew what you were doing, you were timing it right, and you had that approach, you made a fortune by having the timing right on that hot potato. So I guess like I'm just a little bit of a rant on that because I'm struggling with it right now. I was just curious, do you struggle with that as well, going like, oh, I'll put a 20% cash position together or something like that? It's like you have to, if you're a smart investor, you got to have that powder dry, but it just goes against everything we believe in and what we know.
But you think of it, so you're brilliant when it comes to investing in metals, right? Because you understand metals so well. You know that the best time to be buying these things is when they're completely hated and out of favor, and it actually makes you sick to buy it, kind of. And that's how you are with cash right now. It makes you sick to think about owning it because it's inflating so fast, blah, blah. That's usually when you want to own it because that's when it's about to make like a serious move. And so I like to think about, I grew up in the value investing ways and was kind of a pupil of Warren Buffett and those kind of guys. He's got just a massive cash position right now. He's got like $140 billion just kind of kicking it.
What percentage basis is that of his portfolio?
I don't know. I don't know that offhand, but I know it's pretty large. And he's waiting. So this is what he did back in 1999, and it's what he did back in 2007, 2008, and he's doing it again now. So he's just sitting here waiting, and he knows like the writing's on the wall too, just like we do. Like things are bad. And he's licking his chops because he's got just a ton of dry powder waiting to buy these things at fire sale prices. And so that's how I look at it. It's taken me a long time to learn this because it requires a ton of patience and you have to look stupid for a little while. But when you're right, you're really right, and you make life-changing gains. If you have cash just sitting ready to go when everybody is hitting the market sell orders, panic, sell, that's when you just want to be loading up on things and you'll make life-changing gains. So I commend you for it. I know the internal conflict you're having right now, but I think you're having the right conflict.
It's my before even starting this interview and after starting this interview, it's a conflict of mine. I'm thinking about it right now. I'm like, oh, there's 10% of my balance sheet in cash right now. Oh my God, palladium's still at only 2,500. Let's just buy all buy the palladium. I'll go all in on that, or buy me more Bitcoins. Anything, something to get rid of this stuff. But it's like you gotta just keep that cash flow together or something. Or
Yeah.
the best thing you could possibly do, like the ultimate equation, I think, to actually combat inflation is to have your own money printer. So the
Yep.
dollar store turned to the $1.25 store. I mean, you change your prices, now you're fine with inflation. If you're Tesla, your cars now cost more money because it's
Mm-hmm.
inflation. We charge more money now. So now you're
Yep.
fine because you just changed. You have your own printing press. So a lot of people, I want to see. I've made that tweet in the past. It's like I want more Bitcoiners to own businesses. I want more people in metals to own businesses because it's not just about where did I park my money. It's how much cash flow do you have coming in, and how much is that? Can you change that up to shift with this overall market sentiment? That's the best thing I can possibly think of to adapt to this environment. But
Mm-hmm.
the holding of cash is a tough one. But it makes me wonder because right now I'm looking in the real estate market. I'm thinking about possibly buying a warehouse for mineral exchange in the future. Right now I rent and I'm looking to expand a bit, and I'm looking at commercial real estate, and the prices are still pretty dang high for commercial real estate. What do you think about the real estate market right now? Just real quick, like, because that's one of the places we've talked about everything else. It's like to park our money.
Mm-hmm.
Do you think real estate is a good place to park the money right now, especially with them raising the federal funds rate? That changes things a bit.
Yeah, and I just saying mortgage rates just popped over 4% for the first time in a while. So as mortgage rates rise, that'll bring valuations down. I don't think it's going to be nearly the hot investment that it has been, especially just throughout this year. Obviously, real estate it responds much more slowly to these exogenous factors than do stocks and bonds and things like that and commodities. So I think it's going to be kind of a slow decline, maybe just kind of a flat year for real estate. We'll see what happens, and if interest rates continue to rise and mortgage rates go up, we'll see, revaluation of lots of real estate. People won't be able to afford to buy nearly as expensive houses, so it will become a much less good investment. So I mean, if it were me making a decision like that, I think I would wait and watch for a while and just see how this year plays out, because I have a feeling, and I obviously could be wrong, but that real estate prices could at worst kind of stay flat and at best maybe decrease in value. So there may be better deals a year from now, but who knows? It depends,
That's
and different markets are different, right? So local markets, you just have to know your own market too. Some markets never go down. I live in Colorado, and the mountain towns, the resort towns, the Vail, Breckenridge, places like that, Beaver
oh,
Creek.
so that's where Vailshire came from. Is
It is actually. I was sitting in Vail when I came up with it, eating dinner with my
It's a
wife. But
great name. It's a great name.
oh,
Really
thanks,
clicky.
thank you. But those valuations just never come down because they're so desirable. So you have to know your own market that you're in. And in Colorado in general is just a good long-term market. But that would be my advice: is like I wouldn't rush into it at this point, because you may get better deals 6 to 12 months from now.
Yeah, it's the tough part, I guess, is the fixed rate. If you can get a
Right.
decent fixed rate, then it's almost like they're giving you money if you got it at a certain point, and you, in a sense. So it's like if they get rid of that and it's all adjustable rates and it's all or higher fixed rates, it's like that's what I'm concerned about.
Well, right. Well, from a borrowing perspective, it's actually mathematically super smart to take a low fixed rate loan right now, because you're basically making money, right? So if you have your fixed rate of 4% and inflation is 8%, you're basically making 4% on that loan a year. So the bank's losing on that deal. So I would take that all day from a math perspective. But
It's tough. I've never taken debt on in my company or anything like that. All the inventory is owned outright and everything like that. I don't like to take debt, but it makes so much sense at the same time. You got inflation at 8%, and it's not even if that's what they tell us. It's like
yeah,
the real
right.
inflation rate is like. What do you believe in the shadow stat figure? Do you think that it's true?
I do. Yeah, I think, and I don't know what it is offhand, but
They say
I totally
16% on the
Okay, I
shadow
totally
stats.
agree with the premise of it, right? I think the government is hiding how much inflation there really is, because, again, it's good for the government to have inflation. It's bad for the people to have inflation, because it's basically the purchasing power is being eroded. So we're working harder and harder and harder for the same amount of money, but it's worth less and less. So our quality of living goes down, but it's at the preservation of the government. So they love inflation. So yes, I do believe that, and I think that if we looked at it from with consistent factors over decades, we would see a much higher inflation rate than we do right now.
So that's one of the reasons why I'm looking to change states right now. It's like if the states can tax you, then you get taxed on on all of your profits, and then somebody else has to pay taxes on just the sale of them buying something. They have to pay a sales tax on that, and it's like then if when you die, you even got to pay a tax on your death. So it's like, and then on top of it, you got inflation trying to rip the money out of your pocket along that whole process. It's like, oh my, Well, what would the founding fathers of this country think of this right now? You know, they'd be like, wait, we fought a war over tea, you know?
Right. Right.
It was like a couple percent on tea or something along those lines. And we decided, no, that's not with no way are we paying a few percent more on tea. There is no way we will kill you. Like, there's not a cent. Like, that is literally how the country kind of got founded in a sense. So it's like if they saw us dropping every time we make $100, losing $50, then also getting, 8% of it burned away in purchasing power that we got to keep at the same time, it's like, oh, what in the world is going on? What is it? Like, how do we keep a hold on this nest egg,
Right. Yeah, it's
just
crazy
wild.
times. It's
So tell
tough, and
me,
it's sorry.
oh, sorry, I cut you off.
Just real quick, I was going to say my heart really goes out to people. We love sitting around and talking about strategies for how do you, protect and increase your purchasing power in these kind of tumultuous times. My heart goes out to people who are just like slaving away, working 1, 2, 3 jobs, trying to make ends meet. They don't have time to invest. They don't have any idea how you invest in stocks or bonds or gold or commodities or whatever. It's just beyond them. So their life is just getting worse and worse and worse every year, and they have no idea why. So they blame. They just don't know what's going on, and it's so tragic, I think, to see what the federal monetary policies and the government borrowing and all these things that are doing, and the way that they're dividing the country and causing this income inequality and exacerbating it year after year. I just think that's why, like, I spend so much time on Twitter telling people about Bitcoin, because it's like this is the answer. It's super easy. It's accessible to everybody. Like, just start saving in Bitcoin, and it's a workaround for this problem. But you just have to be diligent and start doing it and get educated. So sorry, that was my little closing
No,
point to what you were saying.
I love that. That's probably that I couldn't agree more. And it's tough because when you realize the actual stats on how many people are living month to month in the States, it makes
Hmm.
you realize, like, oh my, the gap is way, and that's what people don't realize is, and I was making, I mean, just like a year ago when they started with the stimulus packages, or a little bit more than that, I was making video after video saying this is foolish, this is going to cause inflation, this is a terrible thing to do these stimulus packages. Why do you? The government's messed up medicine, they've messed up healthcare, they have messed up the
Hmm.
college system, everything that they touch, they mess up. They're
Hmm.
not good at spending money. They are terrible at it. Matter
Yeah.
of fact, I wish I was on the business selling stuff to our government, because you could just charge them whatever you want. They don't even fight
Right.
for it. It's 10 billion. It's like, it only cost me $1 billion, but 10 billion for you. So everything that they do, they waste money on. And so it's like, it's sad because people didn't see that. They saw a $1,200 check, and now they're going to the gas pump and paying more than like double, and they're going, oh,
Hmm.
wow, I guess that $1,200 wasn't all that much, was it? That
Yeah.
$600, all that money wasn't that much. And so there's just a lack of education going on, and I can only imagine if you're living paycheck to paycheck, your rent is also, I think rent, I've heard some people talking about their rent prices jumping 30%, stuff like that.
Yeah.
And so that's just
Yeah.
crazy.
It's crazy. Yeah.
And
Yeah.
what's the way
It's
out for
crazy.
them? And so it's like and the hard part too is, if you want to get to a place of wealth and you want to retain wealth, you have to be able to have the conviction to sit on that position for a very long time. So it's like, I
Hmm.
think it's like the Jesse Livermore saying, where it's like, I made the most of my money not in my trading, but on my sitting on my hands.
Yep.
And it's like, how do you sit on your hands if you're living paycheck to paycheck? It's so hard to just, like, if you had a Bitcoin position of 10 grand or something and you're living paycheck to paycheck, and you're going, I got to dip into that at some point. Now a
Hmm.
lot of Bitcoiners that leverage themselves, because I've never been a fan of leveraging,
Hmm.
those Bitcoiners that leverage themselves for the last 2 years, they're going, wow, I wish I didn't leverage myself at 60 grand or something like that, because now I might have to dip into that, and then now you're losing
Hmm.
your Bitcoin position and you're paying interest on it at the same time.
Right. Right.
So that's a scary place to be as well.
Yep.
So yeah, I appreciate you bringing up for the average individual out there, because it's, hopefully this information helps them in some way. But and the other thing is, like, the divide between the rich and the poor. People talk about, getting more people to the middle class and to wealthy, but the divide is further than it's ever been. I was doing a
Hmm.
study because I'm doing a video on how hard it is to be a millionaire. And surprisingly enough, it's like 8% of the U.S. population is a millionaire. But when you break that down to less than 40 that are millionaires, that statistic drops tremendously, because a lot of people have saved up money, got a house, stuff like that, so they have a net worth of over $1 million. But there's this divide happening where there's a ton more extremely poor people and a ton more rich people.
Hmm.
And although we see more millionaires, we're seeing more poor at the
Yeah.
same time. So it's like that divide is just insane right now, from the people who understand business and understand how to preserve their wealth, and also a lot of old money, versus people that are just trying to build, like to be an entrepreneur. It's the best time to be an entrepreneur and also the hardest time to be an entrepreneur at the same time.
Hmm.
It's a very
Hmm.
tough situation. I just,
Yeah. Again, I think we're in the end days of the Keynesian economic experiment, and we're watching cracks in the foundation form, and it's ugly and it's tumultuous, and I think it's going to get worse. I think it's going to get more volatile, more tumultuous. I think, wars happen in periods like this. People get really unhappy when you're so desperate that you can't support your family because you're working your butt off and you still can't pay for groceries, and you still can't afford to drive to work, all that kind of stuff. That's when people get really, really angry, and things like wars happen and governments get overthrown. And so I just feel like we're in for a really, really tough time. And for the, getting back to that poor person that's working two jobs trying to make ends meet, supporting their kids or whatever, I truly mean this. Start saving in Bitcoin, even if it's like $1 a week. Like, just put something away, and because that is the only way to work around this system and everything that's falling apart, because it's a parallel system. It's outside of the current financial system, and even if everything crumbles and the value of your dollar crumbles, that Bitcoin will be kind of like your anchor, and it will be a protector of your purchasing power in the long run. So you can view it as insurance, you can view it as whatever, but I just tell people, like, please, please, please just start, even if it's just a teeny tiny amount, put that in there and just get into the habit of saving just a little bit in Bitcoin every week, and you'll be really glad you did 5-10 years from now, for sure.
I think it's great advice, and a lot of people out there, they don't understand Bitcoin yet, or they don't even understand gold, or they don't understand precious metals in general, and they think like, oh, that's crazy. I just want to save as much as dollars as possible and put it under my mattress. But this is really the truth, and it's hard. It's, I guess, not financial advice. We got to say it's a disclaimer.
Yep,
Not
not
everything.
financial advice.
Everything we talk about in my videos is already a disclaimer on my main page, so we're good on that. But just to add to that, nothing we say is financial advice. So we'll say that. But at the same time, it's like, and it's crazy because we both agree that it's a good idea to have dry powder in dollars, but at the same time, like your actual saving instrument, it's if you see the dollars, if you got to start seeing it as a hot potato, and how do I move this at the right time to preserve into a different place like Bitcoin or precious metals. Such a crazy environment right now. You wish it would be
Yeah.
more simple, and on a different standard, it probably would be more simple. And I like the way you phrase that as the Keynesian experiment. Because that's what it really is. And these experiments of fiat currencies, I believe they die after 50 years. It's like the number one principle is that at some point around that 50-year mark, these experiments end. And we're at that 50-year mark, where I think we're 52 years now of this experiment, or 51 years since they dropped the gold standard and exited the Bretton Woods Agreement. And that's what got us in this mess that we're in now. And so we're finally seeing it almost coming to an end. Just a wild time. But I wanted to ask you, like, what do you have in the pipeline for Vailshire? Is there anything in specific that you're working on right now and that you want to talk about a little bit?
Well, I started a new trading system back on March 3rd, which I had been contemplating for years and then tweaking for a couple of months, and I finally decided it's time. And basically, what it is just a way for me to factor in everything I have learned over the last decade in finance and to put it into an actual objective trading system. So I'm really excited about it. Basically, it takes my macro views and then incorporate momentum strategies and volatility and position sizing and stop losses all into one big program. And so it helps me to make money, ideally make money for my clients in whatever market environment we're in. So I don't need bull markets. And if it's a bear market, instead of just sitting and losing money and saying, we'll get through it eventually, like especially a year like this where I think it's just going to be kind of a rough year in general, 2022. I'd rather actually make money if possible, even if it is a rough year for my clients, and not see their accounts go down. So very excited about it. It's a way to still profit and decrease volatility and use less capital, less risk, but to still profit. So very excited about it. So far, so good with the trading system. We're up on the month of March so far. And I'm really looking forward to when my system signals that it's time to get back into Bitcoin. That will probably tell me that we've probably reached a bottom and it's time to back up the truck and get
Getting
back
a
in
little
and
sick of
size.
the hate mail, huh?
I'm getting sick of the hate mail. Yeah, I am. But hey,
But that's the thing.
that's
It's
how.
like those little nice tweets of whatever, and those get the likes, those get the retweets and all that. But it's hard to tell it like it is. It's hard to call a spade, and you've been doing
Right.
that for a long time. And when you're accurate, people don't want to give you credit for it. So I give you respect for it, and I admire that about you, and I know what it's like to go against the grain. Especially when you are on. I feel like Twitter is like, of all the platforms, I'm actually the most bullish on like Instagram and YouTube right now, because I find those to be very undervalued. But with Twitter, it's like you get anyone can make like 10 different anonymous accounts, and they can just say whatever they want, and there's no face to it in a way. You have a face to it, I have a face to it, but most of them, they're just they get very comfortable spewing stuff out, and it's so easy to just type something really quick that you can get that hate mail so fast on Twitter. It's ridiculous. So it's a great platform, but it's also a very it's an odd one. It's almost like it's a war zone in its own spot in a way. It's wild. It's a different type. I'm still getting used to it myself, to be honest with you. And I'm not sure if I like it or not. But on that note, I will definitely, for everybody watching this, make sure you go and you follow Jeff on Twitter if you want to enter that crazy place. It's a great spot to get some conversations going, and I always like listening to individuals like Jeff there. And over the last, as I scroll through, I think I have your Twitter feed pulled up over here, and as I scroll down, it's like you've been accurate on a lot of these things where people will give you a lot of pullback on. Like you're talking about being bearish on Bitcoin when it was up higher than it is now, and then you're correct. So it's like it's tough because people have their money on the line. They don't want to be told something like that.
Right. Yeah. So follow me at your own risk. I think both Rob and I are the same, and we're going to tell you what we think, and we're going to be honest with you. And it might not be what you want to hear. So if I have people who really hate it that I do that, and so I'm always like, then don't follow me, please. Or if you need me to, I'll block you if that will help you. But yeah, I'm just going to tell you what I think, and I think Rob is the same. Like, we're just people who spend a lot of time. We have expertise in certain areas. We like to teach. Really, just want to help people like do better. Like I see the struggle that people are going through, and I want people to do better. And that's just kind of my mission from a finance point of view, and from a Bitcoin point of view specifically. So yeah, come find me on Twitter. Vailshire Cap is my handle.
Yeah, I will put all Jeff's information down in the description down below in this video to his website. It's so rare to come across somebody that's operating a hedge fund, owns a hedge fund, that is so vocal and tells it like exactly how you feel. And so it's just a rarity. So I really appreciate that about you, Jeff. And I'm sure the audience can see just how genuine you are. And I'm really looking forward to see what the new trading platform that you're building, in a way, your trading format. What's the right way to say that? Trading format, trading platform?
Trading platform is what I call it. It's just a quantitative approach to trading, and it's designed to make money in any circumstance, in any macroeconomic environment that we find ourselves in. So it may be very timely given what I think 2022 is going to bring.
Really excited to see how that all plays out, and I'm looking forward to having you on maybe in the future as well to talk about this, because you just rolled it out, and you said in the beginning of this month.
Yep, March 3rd. Yep, 2 weeks ago.
That's exciting. Well, I'm sure
Thanks.
everybody will want to get an update on that. So thank you so much for coming on again, Jeff. Everybody, make sure to go follow him on Twitter. And if you're not subscribed to the channel, click the subscribe over here. I believe it's somewhere in that corner. Would really appreciate it. And the bell to be notified of all future videos. We will see you at the next one. Signing out.